Corey, you supposed to be in here charting long-term options with me, bro. Jumping in the Instagram live, but not in the Discord. I see you, man. Get off of IG. Come do these charts. Make sure how we look in the studio. We looking good in the studio here. All right. Let's chart some long options. I am live in the Discord right now, in the live trading room. So, no one's coming through. I'm actually about to leave because it's slowing down my stream, honestly. Honestly, that's what's happening. I'll give people like 5 more minutes to join. But let's look at my favorites. I was thinking about doing long calls on a few different positions, but I'm only going to pick 1 or 2 today. I'm going to expose all my levels. We're going to go to the weekly chart to identify this to start. So pretty much determining a long-term option contract is trying to decide what company do I want to open a call or a put on for the next year. This is going to expire in 2025. So this is pretty much my price prediction for whatever company I select for the last for the next. Like, fuck you. Oh, my hairline, bitch. I cut my own hair. How you look? Get on live. Co-stream, get on here. I'll roast your ass. But anyways, yeah, I'm looking at Apple. I'm looking at Microsoft. I'm looking at Amazon, Google. Those are probably the few I'm going to look to enter a long-term contract on over the next year. Let's see where we were at in January of 2023. This is where I want to look at. I want to look at the last year's performance. So that'll be ranging from right here. Let's see what Apple did. Let's bring out the ruler. We have January 2023 right here up until today. So Apple managed to go up 52% last year. Do I project that happening in the coming year? Not as much for Microsoft. So let's take a look at Microsoft instead. I have a little more confidence in them continuing to push up due to the AI infrastructure they put together with OpenAI and how dominant they've been in that industry. So I'll be more inclined to do a long-term position with Microsoft. Let's see what the option contracts look like. Actually, I could pull it up on here for you guys. Let me see something. So we could look together. Let's pull up Webull and look at some of the option contracts on there. Let me see. Alright, here we go. Let's look at Microsoft. Microsoft options. So these are 4 days, 11 days. We're going to look for something 375 days out. Gives us the expiration date of January 17th, 2025. Later, Webull. I'll install that update later. So let's go down. $43,200. No, $4,320, I'm sorry, per contract. So people don't typically like buying one contract. People usually buy contracts in bulks of 5 and 10. So 10 of those contracts right there would be like $43,000. Shows you these are expensive ass contracts right now. So let's go on down, let me see, to something more in my price range, you know. I like single digit stuff. I know they give you more contracts than this. Where my contracts at? plays and have less volatility. But yeah, let's look at some long-term cheaper ones. So this right here, this will be $1,000 for this contract. Now I say to myself, 475. We're at 370 right now. I had to ask myself, do I see Microsoft going up by $100 in the next year? Not necessarily that it has to go up the whole $100 to 475. It just has to go in the positive direction for that contract to start going up and making money for me. Track or 10 contract that you see right here at 475. This could end up being the same value as these contracts that are up here at 33, 40, as long as the price is trending in the right direction. I could get into how to read delta, theta, and all that stuff. But if you want to learn that, get the options trading course. I teach you all that in there. And let's look at something underneath $1,000. Let's say a $500 Apple call. I like to look at the open interest on some of these things. Wow, look at this. This has 3,000 orders in it right now. So open interest lets you know how many orders are currently, or how many people hold contracts at this price right now. So you see 3,600 people at $450, 3,500 people at $480, then you got 3,700 at $500. So there's a lot of other people looking at this contract price and trying to position themselves for the future with this purchase. So instead of buying Microsoft and holding it as a share for the next year, and let's say it goes from 370 to let's say it goes from 370 to, let's say, 407, right? That'll be, you got right there, that's going to be around like a 10% gain for you, right? Because we're at 370 right now. So every, let's say, $37 it goes up is 10% gain. So that same $37 you can make 10% on by holding the stock. But if you buy a long option and it goes up that same amount, that $37, you're going to make far more than 10%. And that is going to vary depending on the delta and theta of your contract. But that's why people prefer options instead of just holding the shares sometimes, because you get more growth. So let's go ahead and identify, because this year Microsoft was trading around $240, and at the end of the year it's at $370. So it went up over $100 this year already. Now, I mean for last year, because it's 2024. So now for 2024, do we see that same thing happening again? Only reason I could see that level of growth happening again is because of AI and how integrated Microsoft is with OpenAI already. So I could see them potentially going to 500. And I honestly don't have levels past. Let me see if I do have some levels up there. Okay. So these two purple lines you guys see, this is the range I expect Microsoft to trade in going forward. So I could set me a take profit based on this range because it's never traded in this price range before. So as you see, I have no price levels up here. But if I'm going to follow my projection and things stay in line with my projection, I could kind of center it out between these two lines and make that my take profit for that time frame. So if we're getting, let's say we want to go until the end of we want to go to 2025, right? So let's extend these trend lines out to 2025. That's one. Come on. Alright, so this is about the range it should be within going into 2025. That's if it continues on the same trajectory upward that it started back here on October in 2022. If it continues on the same upward trajectory, this is the path it should take. It shouldn't get too much higher than this line. It shouldn't get too much lower than this line. So let's say if we would take profit somewhere around September. September. So I'll put this line right here and I'll make it a green line for my take profit. And that'll be, that should happen around September, around my birthday. Around my birthday this year. So I don't have to hold all the way to 2025 like I said. So now I have a kind of an idea where I would want to take profit and when I should be able to take profit by on this position. Because this is not gambling. You don't want to just go in blind hoping something happens. Now if this trend line breaks and it breaks below my bottom line and it starts fading out of my trend, I got to also have a point where I say, okay, I'm going to stop out of this position and not let myself lose any more money. So if I enter this position here, let's say we have some levels. We have a level, we're right around 370 right now, right? That's this level you can see I have on the side. Let me zoom in. Let's take it down to a daily level. Let's make it a little simpler, right? So we got daily price levels. We were just on a weekly chart. This is why it was a macro chart. Each candlestick represented 1 week. Now each one of these candlesticks represents 1 day. So looking at this chart, I'm looking like if I was to jump in this option contract by the end of this month, which I'll probably let Microsoft play out and see what happens, see if it breaks trend to the downside, because it almost did already yesterday. No, last week it almost did. So I want to watch it and see what happens. But if it continues to hold trend, I could jump in by the 12th and look for a stop loss on that position because we'll be entering around 370, right? So I usually keep my stop losses within 10 to 15%. Now that's on short-term option trades. So long-term option trades, because there might be a little more volatility in price movement, I'm gonna give it some more room, and I'm gonna give this long-term contract about 25% room to run down, 20 to 25% wiggle room, which means I will allow this price to pull back from 370. I may allow it to come down to, I think I'm gonna make my stop for this position right around here, 341. We're gonna turn this to a red line because that's gonna be my stop for this contract. All right, so now we got a stop out, 341.93 is going to be our stop loss if we are wrong in this long-term prediction for Microsoft this year, and our take profit is going to be up here near 503. Let's look, because Tesla is another one I'm considering. Let's check Tesla out. Let's see if the chat's talking about anything. Lisa, you gotta be my chat person. Are you looking? You gotta see if anybody's talking crazy. Can you hear me? Let's look at Tesla real quick. We'll do Tesla. Is Tesla a good investment going, a good option investment to take for the year 2024? Tesla's in the process of consolidating right now at this 240 price level. You see it's been holding and struggling around this price level since January 2023. For a whole year it floated right around 240. Not too high above it, not too far low below it. It stayed around this range and it's right back there now to start 2024. That's typically not a really good sign. It consolidated for an entire year, and now you also know about Tesla having the recall on the vehicles, and the automated drive is not working perfectly. So I would be a little hesitant about entering them for a long-term, for a yearly call. It might be good, might be a yearly put, but I also don't feel comfortable betting against Tesla for a whole year. So this one I'm actually going to stay away from. Let's look at Amazon. But I do like them as a long-term company. I just don't know how this particular year is going to be for them. I don't think it's going to be terrible, but it may not be great either. Amazon. Amazon, the behemoth, taking over. It's a whole week. We're going to look back to January 2023. Right around here, this price. So where were we at? By the end of January 2023, we were at $103 a share on Amazon. Okay. So they went up about 40% this year from January to this January. Now, they had highs before that they reached that we haven't yet gotten back to yet, this 188 price level. So that's potential for growth right there without making new highs. See how Microsoft, it had a stratosphere it was entering that it's never been in before. It's hard to set price levels around that and price prediction around that because you don't have any reaction points. You don't have any points of resistance or support to gauge your entry off of. So this may be a little easier with Amazon to do because they've had some higher prices in the past. You can actually see they consolidated around this level for August 2020 until January 2022. They consolidated in this 160 to 180 level for almost 2 years. And we're heading back to that level now. They could face heavy resistance right here at this 150, 158 price level, which is where we're approaching. We're approaching 158 on Amazon. Right now we're at 147.42 and sitting on these support lines that I have. So, not thinking of short-term trades, I'm thinking long-term. They're up 40% over the year, over last year. They have good potential for growth. I don't see any negative news catalysts for Amazon. You have them entering the AI industry as well. So I could see them as a potential strong long-term play for this year in particular. And let's see. I will probably enter that long-term position. I'm going to wait for this pullback to complete. As you see, this MACD, the moving average, is on a decline. And I want to wait till it crosses back into the red like it did over here. And kind of wait till we see a recovery back to the upside before I enter that long call position. So it started to do that right here in October. So October of 2023 would have been a perfect time to enter a long call position on Amazon. That expired sometime in the end of 2024 or 2025 because you caught it on the pullback on the weekly and then you catch it in this recovery. So if you caught it on the pullback, you could have caught it down to like what, 124, low 130s, 133, 131. That might be the best area to catch Amazon, honestly. All right, then we got so we're gonna make this an entry. I'll put a little red line right around here to remind me to enter. And then we're going to have to set a take profit if we enter this position. The potential take profit, I'm going to set it above this 170 because if we're going to rally through the year, it's going to push above this level. I'll take profit honestly from 140. If we get back up to this 180 level right here, if we get back up to where 184.70, that's going to be the take profit for that long-term Amazon position if you're entering that. So you're looking for an entry in the 130s and take profit around 184. By 2025, it should be up there. But let's see how this breakdown plays out first. I wouldn't jump in right this very second on that one. I like. Let's see how much these option contracts cost for Amazon. Let's pull up Amazon. Amazon. Let me see something. Amazon, January 17th, 2025. Let's see what those contracts look like. See, these contracts aren't too expensive. Also less than $1,000 right now. If you're playing with something less than like $100 and you're looking for long-term positions, like I said, you're gonna have to look at. Oh, they did give you all the strikes. Huh? This is all the strikes. Yeah, if you have $100 or less, you probably have to get something that expires before January. You might have to go into the September contracts. But as long as you have $200 right now, you could buy contracts that expire up to a year out. I would look to purchase maybe the $200 option contract. As you see, this has the most open for calls. This has 22,000 orders in already. People have 22,000 calls in already for a $200 calls on Amazon, so they're expecting it to hit that price. By this trend towards that direction, those contracts right now are up 7%. Dollar contract. Now, as the price gets closer, just so you have an idea, as the price gets closer to your $200, the value is going to start increasing as you see the contracts on the call side. So if you want to get a good idea of how much your contract could be worth, and you're not, and you dove into your Greeks and your delta and theta already, you could kind of future forecast based on see the option contracts valued at now for the contracts that are closer to being in the money. All right. So I think that the $200 contract is a good one for Amazon. Yeah, I think those are the two I'm gonna stick with for today. We're gonna keep the analysis limited to those two. I was hoping some more people came through. We could have looked through some companies for them, but for me, I'm a pretty simple, straightforward guy. Amazon, $500 calls look good, and then we had the Microsoft. Go back to Microsoft. Microsoft, we were looking around the same price. We're looking around the same price. The 505 to the $500 contract. Make this blue. No, I already got some blue. I need a unique color. Purple. Yeah, there we go, purple. We do the same thing for Microsoft. I'll pull it back up. So purple, this is going to identify our entry price where we would like to get in. Stop loss, if we get in at 133, like I said, I try to keep my stops around 15-20%. This is a longer contract, so I'm gonna let it break down below. If it gets below 133, is we're gonna say 123. If we break down below and close below 123, you want to exit that long position, because we could have a collapse from there and it could go all the way down to $90. You don't want to lose that much money. Don't mess around with options like that, even if they're long term, because they're not as safe as buying the straight up company itself. You got a lot of different leverage. You're pretty much in a leverage position when you buy options, because they're giving you access to 100 shares. So they're pretty much, with one option contract, you have control over 100 shares of that company. That's different than having 10 shares in a company and then the company goes down from $147 to $100, versus you had an option contract that you have 100 shares of leverage on and it goes from 147 to 100. You lost a lot more money in that leverage position. So be careful with options. Always tread with caution. But you don't have to be too scared. If you have your parameters set for take profit and stop loss, you should be all right. All right, don't trade with fear. Fear only makes you lose. Fear keeps you on point, but it also keeps you from taking chances that you should. I don't want fear to paralyze you in the market. Fear of loss, because everybody takes losses in the market, and that's the only way you're really going to end up learning the market in an intimate way. So let fear be your fuel, not your deterrent. And everybody who came through today on the live stream, appreciate y'all. I'm going to end this stream here. We set some long-term positions for Amazon and Microsoft. I think those were some valuable gems. If you didn't catch it, rewind, play it back, share it with a friend, follow the page.